March 10th, 2025, a day etched in the memories of investors as the day the music stopped and the bill for Trump's trade war came due. The markets, long accustomed to the sugar rush of tax cuts and deregulation, finally tasted the bitter aftertaste of uncertainty. It was a bloodbath. The S&P 500, a bellwether for the American economy, plunged by a gut-wrenching 2.7%. The tech-heavy NASDAQ, a barometer of future innovation, hemorrhaged a staggering 4%. And the Dow Jones Industrial Average, the granddaddy of them all, shed almost 900 points, its worst performance since Trump's election itself. This wasn't just a blip, it was a full-blown market seizure. Over $1 trillion, poof, vanished into thin air. The losses were felt far beyond Wall Street, rippling across the globe like a financial tsunami. From London to Tokyo, investors watched in horror as their portfolios turned blood red. This was the day the trade war, long dismissed by the Trump administration as a minor skirmish, morphed into a full-blown global conflict, with casualties mounting by the minute, the catalyst for this market meltdown. Ironically, it was the very man who had promised to make America great again. In an early morning interview, President Trump, with his trademark blend of bluster and bravado, refused to rule out a recession, blaming it on the very trade war he had ignited. This admission, a stark departure from his usual everything is awesome rhetoric, sent shockwaves through the markets. The Trump put, the belief that the president would always prioritize market gains over all else, had officially expired. The markets, like a spooked horse, bolted. Panic selling ensued as investors, their confidence shaken, rushed for the exits. The trading floors, usually a cacophony of shouted orders and ringing phones, fell eerily silent, punctuated only by the sound of jaws hitting the floor. This was no ordinary market correction. This was a full-blown crisis of confidence fueled by the president's own words and actions. Trump, ever the showman, had built his presidency on a platform of economic nationalism, promising to bring back jobs and punish countries he deemed unfair traders. His weapon of choice, tariffs, these levies designed to protect domestic industries, had become the blunt instrument of his foreign policy, wielded with little regard for the potential consequences. From the outset, economists and business leaders had warned that a trade war was a dangerous game, one that could easily spiral out of control. But Trump, convinced of his own deal-making prowess, had brushed aside these concerns, dismissing his critics as gloom and doom merchants. He had imposed tariffs on Chinese goods, slapped levies on European steel and aluminum, and even threatened to tax imported cars. Each new tariff announcement was met with a chorus of disapproval from businesses and foreign governments. But Trump, fueled by his own rhetoric and the cheers of his base, had doubled down, seemingly convinced that he could bully his way to a better deal. But the markets, unlike his political opponents, were immune to his bullying tactics. They spoke in the cold, hard language of numbers, and the numbers were starting to paint a very different picture. The trade war, far from being the easy-to-win proposition Trump had promised, was proving to be a costly and unpredictable affair. American businesses, forced to pay more for imported materials, were raising prices, squeezing consumers, and cutting into profits. Farmers, once the backbone of Trump's support, were seeing their markets evaporate as China, the world's largest consumer of soybeans and other agricultural products, retaliated with tariffs of its own. The economic pain, once a distant threat, was becoming all too real, and the markets were starting to take notice. The Trump bump, the surge in stock prices that had followed his election, was long gone, replaced by a growing sense of unease. The trade war, far from making America great again, was threatening to drag the global economy into recession. The trade war, far from being a bilateral spat between the U.S. and China, had morphed into a global conflagration, engulfing allies and adversaries alike. China, initially caught off guard by Trump's aggressive tactics, had responded in kind, slapping retaliatory tariffs on American goods, from soybeans to airplanes. Canada, long considered a close ally, had also felt the sting of Trump's tariffs. In a move that shocked many, Ontario Premier Doug Ford, usually a Trump ally, announced a 25% surcharge on electricity exports to several U.S. states, calling Trump's tariffs a disaster for the Canadian economy. The European Union, too, had retaliated, imposing tariffs on a range of American goods, from Harley-Davidson motorcycles to Kentucky bourbon. The global trading system, painstakingly built over decades, was unraveling at an alarming pace, replaced by a chaotic web of tariffs, quotas, and other protectionist measures. The free flow of goods and services, once considered sacrosanct, was being choked off by a rising tide of economic nationalism. The consequences of this trade war were being felt far beyond the boardrooms of multinational corporations. Consumers were facing higher prices for everything from washing machines to cars. Businesses, facing uncertainty and rising costs, were delaying investments and laying off workers. The global economy, already showing signs of slowing down, was being pushed closer to the brink of recession. The market meltdown on March 10th, 2025, was not an isolated event, but a symptom of a deeper malaise gripping the global economy. The trade war, far from being the easy-to-win proposition Trump had promised, was proving to be a costly and unpredictable affair, with no end in sight. Economic indicators, once pointing to steady growth, were flashing red. The jobs report for February came in weaker than expected, with only 151,000 jobs added, well below the 170,000 economists had predicted. Consumer confidence, a key driver of economic growth, had plummeted as Americans, worried about the future, tightened their belts. Even the housing market, a bright spot in the Trump economy, was showing signs of cooling down, with mortgage rates falling for 7 consecutive weeks, a sign that demand was waning. Adding to the sense of unease, major banks were sounding the alarm. Goldman Sachs, one of the world's most influential investment banks, had raised the probability of a U.S. recession in the next 12 months to 20%. J.P. Morgan Chase, another Wall Street giant, warned that the chances of a global recession had risen to a staggering 40%. The White House, in response to the market turmoil, continued to peddle the narrative of a strong economy, with Trump's economic advisor, Kush Desai, claiming that the president's policies had led to unprecedented job growth and investment. But the markets, as well as most economists, were unconvinced. The consensus was clear. The trade war was hurting the U.S. economy, and the longer it continued, the greater the risk of a recession.